All right, good morning, everybody. So doing a little bit different kind of Zoom here. Let me get a sound check, make sure everything is working. All right, thank you, Nicole. You already knew what I was going to ask. Thank you. So, go vote. That is what we're seeing everywhere. Every morning briefing, everything from 5 things you need to know to finance juice, morning brew, everything mentioned. Go vote. There is a slight indication that the market is going to rally today, but I don't necessarily agree with that assessment on the idea that there's likely to be a contested election, at least in one area, that will put off the outcome of the election for a little bit, right? And I've heard more than one place say it's going to take a few days. So eventually, once the election is out of the way and we actually have an announcement, we're likely to see a small move up in the market just because the unknown will be known, but only because of that, right? And it could be a small move, it could be a big move, but if you go through, say, for an example, tier 1 alpha or Bloomberg's 5 things you need to know, they all kind of agree that having an outcome, just having an answer one way or the other, is going to be a bullish bias or a bullish bent to the market. We're going to start out today with tier 1 alpha. Normally I don't get to cover these because the emails generally come out kind of late, but today they're out early enough that I can bring them up, mention them. They're a little hard to read from the email point of view, so I'm going to open it up a little bit. That way we can see it bigger. This email is free and it has some pretty neat stuff. Depending on the kind of trader you are, it gives you levels. So I got this upper gamma band. You can mark that on your chart, and then the lower gamma band. And it's not like anybody is telling you to go long or go short when price gets to those levels. It's the idea that, very similar to Bollinger's or Keltner's or anything else, price should stay inside the bands most of the time. And when it gets to the edges of the bands, it's worth paying attention to, right? It's the idea that there's also the 0 gamma level, which acts as a little bit of a magnet. When we start getting too close to it, we tend to gravitate towards it. So I know it's a pretty messy chart, and you got to do what I did and basically detach it out of the email every time you want to look at it. But you can just read the levels and mark those on your chart and just change them every day. It's nothing more than another pivot point that we focus on. When price gets to that level, we expect a reaction. What's the reaction going to be? And we just kind of move forward from there. All right, so there's the gamma bands, which is what we have right here. Then there are the volatility bands. So by the time we're done, we get 5 pivots. These are in the lower left corner. Most of the time, you might find them every once in a while at the top. And you can see how price maintains itself inside these bands a lot. Very, very seldom does it reach the edges, and it took a significant gap down market that day to be able to get there. Unfortunately, there's not a huge amount of resources on understanding everything that that Tier 1 talks about, but they do go through often if you read the emails every day, and you get little nuggets of information on how to use this thing. Then they've got the same bands, but without the chart. They have the same bands for SPY, the Qs, IWM, right? All of your favorites. And then they'll have a chart on the Qs, the Russell, and they usually have like sector, all your sector names. I wouldn't recommend that you go in and mark those out on every single chart every single day. It's just too much. But for an example, if you trade one of these frequently, like, XLF, it's a cheap one that I like to trade a lot. It's cheap, it's liquid. If I was going to trade that, then I would want these levels, and it's free. I like free. Free is good. So you can just go to Tier 1 Alpha and sign up. They're on Twitter as well, so you can find them there. Yeah, I mean, why wouldn't you, right? On everything else, looking through Morning Brew and 5 things you need to know, not a lot on the docket today. Last night, crypto really started to get crazy. And if you read Tier 1 Alpha, it turns out that that's not exactly new. It's exactly what happened at the last midterm election of consequence. So consolidation and then drop. We've got a lot of divergence going on right now. Tesla made a big move to the downside, while Apple and Microsoft was kind of holding the line, or maybe it was Amazon. But within the monsters of tech, there is some significant divergence. We're trying to work our way back outside of that box. We were inside day breakout. Looks like we're coming back inside the day at the moment. The election is going to be a little bit of a catalyst, but it's not expected to stick. So that's one thing that, you want to continue to keep in mind, is the outcome is expected to be at least slightly bullish, but more like throwing gas in a fire, right? A quick flash and then it's done. We do have additional auctions today, one at 11 o'clock and then another auction at 1. So 11 and 1. IRX, the front end, continues to just rip to the upside, carrying the rest of the curve with it. And I mean, it's just completely and absolutely parabolic. So, it's almost untethered in its movement. And it brings the rest of the curve up, whether it likes it or not. Right? There's this really great feature at stockcharts.com where you can fast forward through, like 20 years of just about any symbol or pair group. And if you put a yield curve on there, and you can watch as we went through, the .com area, and then the 07 credit default swap situation, the COVID, during every one of these bearish market events, how the front end would rise up first, the IRX, and then the other part of the curve, would have to rise up to meet it. So you don't even need a stock chart account to see that, but it helps if you have an account there. We do have CPI this week, but not today. This CPI is not ours, right? So the time of day should give that away, but I guess maybe it didn't. So as you can see this morning, cumulative volume is a little light, but not enough to be concerning. If it's below 80, I would be concerned. The idea that it's around 114, 111, yes, it's a little light, but it's not enough to be too concerning. Right, as I mentioned, we were inside day breakout. Visually, it kind of helps sometimes just to put a box around that thing. So we really want to see this stick the move, and the fact that it keeps coming back in is not exactly, a warm and fuzzy feeling. CPI is still the biggest thing on the block this week. There was a real expectation that we weren't going to do much until we got CPI. So the fact that we're getting any kind of bid at all, so a little bit of a surprise. It's not extreme, but still a little bit of a surprise. I would tie this more in with algos than anything else, right? This is just machine trading, responding to news and reports and things like that. Nothing beyond that. So hedging activity. We have an ADR of 2.5 with no market maker move. We are above the weekly pivot point, which I've mentioned before. When we're above the weekly pivot, we consider the market bullish. And when we're below the weekly pivot, we consider the market bearish, right? Just from an idea of we would want to look for longs when we're above it. But we could be above it, way up here, way over extended, and then be moving back towards it. We, of course, would not still be using that same sentence, right? Oh, well, we're above the weekly, we're going to go long. So which direction are we heading? We got through it yesterday, and we're still, like what a market does, struggles to get through resistance and then pulls back and validates that old resistance as a new support. It's like a really big Busby. And now that the Busby is done, the only thing it owed us was to get back to the top. It didn't owe us any more than that. So, we have the breakout, comes back down and resets. That's the Busby. We get the run back up. It only owes us to that point. It's done. The entire pattern has been played out already. We're still in the middle of nothing. We got the previous week's high sitting at 39.28 and the previous week's low sitting at 37. So, when we talk about don't diddle in the middle, depending on what chart you're using, we're right in the middle. There's the 50% retrace from Friday's high and not Friday's high, but from last week's high and last week's low. I point that out because the 50% mark becomes an important metric on price action. We don't want to close the day above that 50% mark if we're bearish. So we can wick above it, can dance around up there all we want, but at the end of the day, it needs to close below that 50% mark. Otherwise, it kind of takes the argument away of being bearish. Since the election today is very unlikely to have results today, we're not expecting any really big bang moves. But of course, outside of that, any other news could drive the market. The auctions that I mentioned aren't going to have any real news release at all, so they're not going to be enough to cause a bang. It's still wait for CPI. Hold the line and wait for CPI. All right, so we moved off the bottom of the 10-day, 30-minute volume profile. When we're at the top, we expect to go to the bottom. When we're at the bottom, we expect to go to the top. We still have to pass through the point of control. It's the greatest amount of volume, and it is now a level of resistance, but also a little bit of a magnet. So 38.41, 38.43, right around in that area. Should we get through that and then pull back to it for validation of resistance, the rest of this trash to the upside shouldn't be too concerning. Be able to get through 3,900 and retest those tops. Notice that that double top up there doesn't really have a lot of volume to it. Kind of goes to the argument that pivot points or previous day highs, previous day lows, they do have value, and we do see price respond there. But it's not based on volume or volume profile unless we were to get into a smaller chart anyways, and maybe validate them through that. That VPOC might be in play today, 38.47. It'd be a first touch play when we get there, right? First touch play in this instance would be that we hit it and reject off of it at least once. Counter trend traders could get a short off of that. The reaction would be, fast. So, you're not expecting to hit that and then travel all the way back down 30 or 40 points. And we now have a VPOC from yesterday. So should we move to the downside, we've got one at 37.88. The energy trade is becoming more and more crowded every day. I'm seeing more and more people getting into that with excitement, having no idea other than, oh, I heard about this energy trade. I heard energy is going to go up. And it's kind of like that old story about, the guy on Wall Street who was getting stock advice from the person shining his shoes. And he decided when the shoe boy is telling you, about stock tips, it's time to get out of the market because it's got way too over exuberant. It almost feels like that. Everywhere I look, there's a new trader asking, hey, how can I get into the energy trade? I hear this energy trade is going to really blow up after the elections. Energy's going up and everybody's got to get in it. And I want to get in it too. I'm short energy now because of that. Do it however you want to do it. Even just a butterfly, right? A $2, 2 pennies butterfly. It doesn't have to be expensive. Pick your poison, pick your market. If energy goes down, ag is likely to go down. Commodities are likely to go down. Kind of take your best shot. You want to go long and get into the crowded trade with everybody else? Hey, have fun. I was listening to somebody a lot smarter than me talk about this yesterday, and they were of the opinion that the market could get a little tricky first and crush the bulls so that it shakes everybody out and then run energy to the upside. And we've seen that kind of tactic many times before. It's literally what a double bottom does, or a double top, right? When we get down to that bottom again and we're ready to make a run to the upside, it's crowded. Everybody's trying to play the bounce. So they'll punch through the previous low, get everybody excited for no bounce. Everybody that was going to go long decides they're not going to go long and they instead go short. Then they pop right back up through the bottom of that double bottom and rip to the upside alone without having a crowded trade anymore. So I'm not arguing that energy won't go up. I'm arguing that they might crush all the bulls first and then run it up because it's too crowded of a trade. And if I'm wrong, then, it's my money. I'll lose on my side of the trade. I do agree with Tom Sosnoff with the idea that if you don't like the trade that somebody is talking about, take the other side. So we can see with XLE, we've got this double top. And just like with double bottoms, a double top, we want to see it go higher than the previous high first before doing anything else. XLE has a market maker move of 2.3%. Something to keep in mind as well. So this OVX is the volatility indicator for crude or for oil. And it's been in this range for quite a long time. I've got the box drawn around it. We kind of wick out of it from time to time. But with all of those wick outs, we've managed to just stay in the box until today. We're outside of that box. Now the day's not done. It could wick back in, and then it would look a lot like the 28th where we expanded to the upside and then dropped back down again. So we could just end up with a really big wick down here today. But for the moment, volatility in crude or energy is depressed. We've still got that massive candle on US China. So we're IX10 at this point, but it's not really, it's not compressed and it's not impressive. It doesn't trade like an IX10 when you've got this gigantic, massive candle. So we need that resolved either through, 5 or 6 days of IX10 in these smaller size candles, or just by getting out of that box that we're in, that wedge. This morning, we've got stocks and bonds moving in the same direction. See the size of this little bitty candle right there? This is on bonds. And there was that significant move in Bitcoin, which it stopped, it stabilized around 19.4 and just kind of holding the line. And it's interesting to note that volatility didn't respond to it hardly at all, and in fact went down even more. So volatility is still broken. Nothing really responded to that move last night when Bitcoin dropped. And sure, a little bit in the futures, but barely. All right, semiconductors are up this morning. We closed at 195. We're at 197.6. So that would be a breakout level. And there is a gap to close at $200. So it's another $2.50 higher than our current location. That kind of cleans it up a little bit. So you can see this level 200 comes right up into that structure there on the left. The idea would be semiconductors have been a great short. I don't think that's done yet, but it's certainly getting old, right? We've been hearing that half the year. Oh, it's the best short out there. It's the best short that you can get. There's still so much meat on the bone. Short semiconductors. And sure, I mean, there certainly looks to be a lot left here. If you compare it to, say, PayPal or in Netflix or Facebook, considering how far those kind of names have fallen, the semiconductors don't look as bad as that. But I mean, it's already taken a significant beat down off of those highs, right? From the COVID low to the 2022 highs, we're past the midpoint. So semiconductors might still have some meat on the bone, but I don't think that it's still the greatest short left in 2022 at this point. I would still say sell the rip, but a little bit of caution. Let it at least complete the swing high, swing low before attempting to take that shot. Right. So somewhere around 200 if we can continue this breakout this morning, get that gap close, which will become a little bit of a magnet. So 2056 is the target that I'm looking for on SMH. That would get the gap closed. The cumulative tick and the tick and the advance versus decline are still having issues. The lines are there to now, but yesterday and on Friday, this indicator's been, all of these breadth indicators have been kind of acting up. I don't have an answer for it. The data is just not there. So I don't know what to do with it. I don't have an answer to why it's happening either. Just wanted to point it out because I've had people ask, hey, is it broke? No, it's the data that it gets, right? It gets the data from the market symbols from Thinkorswim. When you go up here and you go to indicators, all of these market symbols are old school market indicators. UVol, DVol, tick, trend, advanced decline, advanced minus decline, on and on, right? All of these different ones. You know, as much as we do have a few names moving around this morning, most of this market is flat, waiting on a catalyst. So I would proceed with caution and keep in mind the base case argument is that we hold the line until CPI. So we could, you know, slow grind a little bit higher, or we could drop all the way back down and retest, you know, the lows of the week. Do a whole lot of running around without accomplishing anything, and that would fit the argument. It would fit exactly what we would expect, that we're going to hold the line until we get the CPI report. And with that in mind, you know, keep your eye on the projections for rate hike. So we're sitting at 375. The projection is 425 for December. That would be a 50 basis point rate hike on the left side here. But the number is what we want to keep track of. So in the last week, we went from 44.5% chance to a 52% chance. And they've been unwinding a 75 basis point rate hike. But only barely, right? But look at the numbers here. We went from a 49.7 down to a 48, and we're still at a 48. So they didn't unwind this very much at all and went down 1 percentage point. This one just happened to have gone up 8, close to 8, just doing some rounding. So you want to keep track of these and see if they're starting to price in a pivot, which would be a little unrealistic, or at least a reduction in how many basis points we are expected to get. An unwind, say unwinding from a 75 to a 50 or from a 50 to a 25, that's bullish for the market. When they start pricing it in, that'd be bearish for the market. All right, high short interest names are down. Let's see if those China names are still moving around. So we got JD and only not a lot of China names. No, not a lot of ADR, those ADR China names this morning, which is a little bit of a surprise, I guess. But with K-Web down, shouldn't have been surprised. And we'd been looking for those China ADRs to quit getting that state sanctioned flow, right? All the banks were told over in China to start buying those stocks, but for how long and how much, right? It's kind of the argument. We knew the idea would be to short those suckers once the flows stopped, and it looks like we might have reached that point. So JD or Baba, Baidu, they all have that same setup, right? That same pattern. I was kind of hoping we'd get a little bit more out of them so we would have more room to dump. This is just one day where we haven't seen those flows, so I wouldn't run out immediately and start trying to short those suckers yet, but certainly be on the lookout for that flow to dry up. There are a lot of chip names in here this morning, though. Almost every name on the list on the S&P side. Is a very weird morning. All right, so we got the S&P 500 filtered down to 100 names, and I adjusted the color so it would just respond a little quicker. You can see the monsters of tech from the size of the box, since the boxes are a reflection of the size of the market cap. Tesla's flat this morning after that pretty good run to the downside yesterday. I would stress caution on looking for a reflexive bounce back up in Tesla. Don't automatically assume that it's going to bounce back up. Look at Netflix, right? Over the last 2 weeks, everybody kept thinking Netflix was going to bounce back up, and it just kept crushing them, which helped the move to the downside. These chip names are a little extended. Let's go look at the NVIDIA. No weekly gap to deal with. But we do got a monthly gap. All right, so you can see NVIDIA is gapped up this morning. It's at 147-ish, right around in there. There's a gap to close at 150.94. That would be my target. I wrote up a little bit about NVIDIA on Sunday and how we've got this nice reversal opportunity coming up, right? If we're following that swing high, swing low, something like that. I wouldn't get too extreme about where the line exactly is. Just kind of follow your eyes with it. Sell the rip, sell the rip, sell the rip. If we're going to continue with the mantra that shorts and semis are the best thing to short right now, then we'd be looking for a new place to turn this thing over. And to me, that would be if we close that gap on the monthly there. AMD was one of the names that had some unusual options activity yesterday. Maybe just a little bit of a sympathy play. So could get a little overshoot, call it 151 in NVIDIA. Now with Netflix, we did have that really nice rollover from around that 307 area. But now we've got a Busby. So I would stress a little bit of caution. If you're short Netflix, look for a little bit of a reflexive bounce here. The Busby owes us back to the top. Right, so you get the breakout, comes back down, bounces, makes the run back up, but it only owes us back to the top. The next pivot in Tesla is 190.41, call it 190 half. I would stress a little bit of caution on this one. It is on the intraday setting up for a really nice double bottom. And with these double bottoms, like I keep talking about, it's supposed to come over and it's supposed to go deeper first and then rip so that it can trap everybody here. We wouldn't want it to come back down and bounce perfectly. That would be a weak low. That's not what we would want. So if you're short Tesla, just, kind of approach it with a little bit of caution. I would say you're probably okay when we're out here on this higher time frame. You can see where the pre-market we're down at 194.25. When it comes to these double bottoms and that bounce that we're talking about, when it continues to go down and down and down and down, there's the argument that it's not going to bounce and come back up and rip somebody apart, right? And I would argue at this point, since we're all the way down here already, that there's not going to be that bounce for the double bottom. We're just heading to the downside, right? And fast. $143 is a quarterly level worth keeping an eye on. So 190, 182, 167, 143. $89, 82, 67, 43. So we got a little bit of a TRB setup on DWAC, Digital World Acquisition. This took off yesterday. See, we're kind of fading out of it a little bit this morning, which kind of makes sense. We had a strong gap up, kind of consolidated until lunch, and then it took off again. So you got an overhead trend line to deal with. If we happen to rally or happen to continue this rally, you can see in the pre-market, though, we're about halfway through. No, I'm exaggerating, not quite half. I would keep track of the 50% mark, which is 24.78. It's close enough to $25. Keep your eye on the $25 mark. really needs to hold above that. And we're getting a little bit of a reflexive bounce in Carvana, which has been, an absolute amazing short. They're now saying that this is likely to turn into a penny stock by the time it's done. So any move up is a new sell the rip opportunity. Seeing Carvana up and AMC makes me start thinking that we might want to watch for a short covering rally in some of the most heavily shorted names. You can run a Discord command to get the list of names that fit that. I'll just leave my screen there for a second so you can take a screenshot. These are the top short interest stocks, at least the top 15. And these are high short interest. So Beyond Meat, Bed Bath & Beyond, Upstart Holdings, these names have not changed. Carvana, MSTR, Nokia, those names just dominate the list, and they have for most of the year. Big Lots, Wayfair, and it's not expected to change anytime soon, but I keep track of those names to see if we're getting a rally out of that area, right? And then what usually happens if we start to see a short interest rally there is that we see the Reddit crowd also start to pile in on those meme stocks. So at least there's something to focus on this morning. For the indexes, just keep in mind we're still looking at holding the line and waiting for CPI. That's what I got for you guys. Be careful. I'll see you all tomorrow.